Hey everybody, it's Birb, Adrian speaking. Welcome to another episode of the Nest Show podcast. And here today we're continuing with the recent series that we kicked off with BC Richfield of our team, of the Birb Nest team, actually, who happened to be joining along with our today's guest as the new beautiful people, as the beautiful, full of knowledge people who are actually committing on a very high level in terms of their quality for what they're representing for the Bitcoin analysis, for cryptocurrency analysis, and way beyond that. And that makes me very happy because today, like I said, we have another member of our team, another gem, big talent, huge personality that I want to discover throughout the show with you guys. Welcome to the show, Xulian. How's it going? How are you feeling?
Thanks so much. What a warm welcome. I'm doing all right. Yeah, excited to
Okay.
be here.
Amazing. So much excited I am as well. Yeah, so there's definitely I think a couple of good points to be mentioned. A little bit with a kickoff for your background story, right? Because many people, have not discovered yet your amazing works, be it within the Birb Nest or just even outside the nest. I'm talking about YouTube, amazing streams on the on-chain analysis side, amazing content coming up on a daily basis on your Twitter. So talk to us a little bit, to all the viewers and listeners about your background story. How did it all start for you?
Yeah, it's actually a funny story. When I started into crypto, it was my dad first who had got into crypto. And he didn't really want to tell me about it. It was all he got Ethereum. It was early 2017. But it was quite volatile, so he didn't really want to tell me about it. And he kind of told me a little, and I got really curious about what's happening here, what's all this, and then I started going down the hole late 2017. I was just all in at that point. Um, and then I started doing a little bit of trading. But overall, that time was probably the worst time to start trading, right near the top. And I got into ICOs. I probably did every possible mistake in 2018, 2017. And then I kind of stepped back for a moment. I tried to learn about it a lot more, and really understand what wanted out of crypto. I really love what crypto, Bitcoin, Ethereum, what they all stand for in terms of offering people freedom, offering people um, choice, like independence from governments that have a lot of overreach. I'm from Mexico, so I have kind of firsthand experience with governments canceling bank accounts or not letting people withdraw money, or just this overreach and lack of financial freedom. So I really love the idea of what crypto stands for there. And then in 2020, 2021, I kind of decided I wanted to do this full time. So I spent pretty much a year diving into and learning as much as I could, whether it be on-chain analysis, whether it be fundamental analysis, really understanding tokenomics. I have read, I don't even know how many white papers at this point. And I think with the mixed experience of 2017, 2018, and that hype cycle, and then going into 2021 when you actually had real products launching. You weren't just selling an ICO with an idea, you were actually selling a working product. I started kind of getting this almost bullshit detector, if I could say that. So I definitely got into projects back in 2018, 2017 that I would never be buying now. And I think overall, it's developing a strategy as a fundamental analyst, the same way that you do as a technical analyst. When you only invest when it meets certain criteria, when it's matching your lines, when it's matching your entry levels. It's really being picky with the same type of situation when you go into fundamental analysis and how you can um, justify that purchase overall.
Yeah, I got you. I mean, this is very interesting to me personally, right? I mean, I'm a type of a guy that is basing his trading on the technical analysis side more than fundamentals. Of course, I first and foremost want to ensure that any fundamentals of anything I touch, are kind of like legit enough to get interested, basically there, right? But I had read a couple of white papers, but I'm definitely not the type of a guy that would sit and just simply scroll through hundreds of white papers and talking to the devs. And I know the very basics that are needed. I think the fair amount of knowledge that is needed basically for how it all works in terms of like the basics of blockchain, of I'm not even a programmer or programmist or an IT guy, so I would not even go into too many details for this asymmetric cryptography or whatever you name that. So this is definitely very interesting to have you on the show today. Perhaps I'm going to learn a bit of a piece or two, and knowing that you are more in the fundamental side and the on-chain side, but still not ignoring technicals to it, just makes it very interesting for me and for all the viewers to the podcast to have to perhaps know a little bit of your market analysis approach. Like, how do you perform your analysis? Is it top down? Is it kind of like bottom up? Do you just solve fundamentals and go straight on chain? And tell me how you work with
Yeah,
it.
of course. I think I've slowly been refining my strategy a lot because I think you can really gain a huge edge when you tie together technical analysis and fundamental analysis because um, I feel like when we're just looking at price action, we miss half the picture, or we're often looking at charts and then we see these giant green candles and we missed entries that we probably would have taken if we knew something else besides just the price action. So, when I'm looking at charts or when I'm scoping the market, I first like getting an overall macro view of what's happening in the world. Um, and if you were to kind of move it over to price action, I almost first look at the monthly, then the weekly, then the daily, and kind of start bringing it down. So once I know the general trend in the world, I can start focusing more on, okay, if this is the trend, then what is going to be my focus? Where am I going to be looking for relative strength? So when I get the trend, I then look at smaller trends. So if I'm looking at, I wrote my thesis for 2022, and I was writing how I was expecting a war, and I wasn't expecting a war because I'm in favor of wars. I hate violence and so on. But more importantly, I was looking at how the U.S. was struggling with their money. Um, they're struggling with inflation. They're struggling with they like blaming COVID, but they've been printing ridiculous amounts of money. And for the past 100 years, how does the US save that? They go to war, whether it be a proxy war or a direct war. You can actually see it by a bunch of government officials. War is profitable. So I was expecting something like that, but I wasn't expecting the typical reaction of a market in a war. I think you've actually been sharing those charts in the group, actually, of how usually it's best to buy the invasion. Um, and
That was supposed to be a bit of a meme, but it ended up not being a meme at all, right?
yeah, yeah.
This
I
is
mean,
this is this is bad. Yeah, sorry. Go on.
no, no, you're good. You're good. I think that once you understand how the big players operate, you can then start to pick those trends and then also focus on specific trends below that are going to be kind of it's not really a sympathy play, but it's something that works in parallel with relative strength. For example, in 2022, I knew that stablecoins were going to continue to be a big subject, a big trend. It's a market that's going to grow. It's the third large. If we were to kind of have three markets in crypto, we have Bitcoin, we have smart contracts. The third would be stablecoins, and it's been the largest growing asset class in crypto. So one of my biggest focus this year has been looking at projects that are doing something with stablecoins, and more importantly, decentralized stablecoins. I think we can all agree that Tether, even USDC, aren't the best.
Mm.
So looking
So
at
keep
other
keep it keep it.
projects,
Let's keep it straight. You were talking about Dogecoin, right?
I do like a lot of what Doquan's doing, but I'd also like there's other projects that are great. I do really like Luna. I
just
think
Justin
that
Sun, Justin Sun just released new one, right? That he's about to release.
I mean with that one, the imitation is the greatest form of flattery. So I think that Justin Sun, Near actually did the same thing with their USN coin. So it's kind of the beginning of these imitations of UST.
Mm.
But then you have other coins that aren't imitations, that are doing their own thing, that are really interesting projects. Frax is something very interesting. There's Rye on Ethereum that was originally what DAI was supposed to be. DAI was originally Ethereum backed. It was a lot more decentralized, and then they've moved away from that to having USDC as collateral, and then it kind of defeats the purpose of being a decentralized stablecoin. So as these projects grow, I'm going to be very curious to see how they solve the actual issues in the stablecoin market.
Got you.
You know?
So to kind of like, just wrap this part on, on how we approach this analysis side, right? So the way I understand that from what you're saying, you kind of like start off with the kind of like a top-down analysis that assessing the macroeconomic view in terms of like, there's this assessment of the monetary policy, or there's been, tightening or vice versa, the other way around. And of course, wars, so taking this fundamental side outside of crypto world, right? And then taking it how it translates to the crypto world, right? So do I read that right so far?
Yeah, exactly.
Okay. And then you focus on searching for fundamental trends or fundamental kind of like changes, tendencies. Well, trends, I would say some innovative trends, right? Just like you were saying, there was Bitcoin, there was smart contracts, there was the third big thing, which is the stable coins, which are decentralized, right? So you're trying to spot these big fundamental trends, well, before, of course, the hype cycle starts. Is that correct?
Yeah, exactly. I think another example, so we don't just go on stablecoins. 2021, we had the whole metaverse trend. And I think if anyone had been paying attention slightly before, you would have caught most of the big move, whereas most people jumped in after that Facebook announcement, for example. But you could kind of see that the trend was moving. It was DeFi, it was gaming, and then Meta was kind of the next trend to move into. So I think when you get that edge in fundamental analysis is when you're catching these trends before the price action prices it in.
Well, this is of course, very interesting, I think, for many viewers and listeners, because like on the contrary to technical analysis, you kind of like, some people say you just price discounts everything, right? But there is still some certain asymmetry and certain knowledge power assigned to certain side of the market that is not really apparent or clear at all to the vast majority, right? And the way that it works, from my experience and from the textbook, examples, is that this entire hype cycle, this euphoria kind of like kicks in usually when it's too late, right? So then is probably the, when everybody talks about it, I think many people would rather or would do better if they just simply stay away, no matter if it's a fundamental trade, if it's a technical trade. And I'm here talking about it because I had seen so many comments, so many people just referring to it, that they usually they are the most optimistic about the trends at the very euphoria, at the very peaks, right? So this is obvious. But then they proceed to kind of like do this reverse climbing down the ladder, just walking down the ladder. So they kind of like reject the technicals, because let's say they just got in, it's very peakish moment in the market, and then they say, okay, the price action is just screwed down, right? So but hey, it still has good fundamentals, so I'll keep my bags on because I believe in it, right? So you kind of like proceed from a short-term trader in an enforced manner to become a fundamental, some sort of like an investor, just because the market enforces you to do so. But that's probably not the best way to approach it. But I think we've kind of like already touched upon a very fundamental matter in terms of the 2022 market outlooks. You said you did write certain thesis, material, gathered some information about how how the projections might roll. Do you have anything for us in terms of like what's ahead? Is the war going to expand in your opinion? Do the markets discount this at all? Is it like the tightening, is it going to proceed? Share your thoughts with us, please.
Yeah, I think that this one's definitely an interesting subject, or just overall, it's very complicated. But I think what we see, it's at least for some time now, it has been a very headline-driven market where if you kind of step away from those big headlines and look at what's actually happening, there's a lot of kind of hidden hands behind the scenes working on other things. I think something that is going to be very curious to see is how the Fed is going to react once um, the housing bubble starts to come down, because I think there's a housing bubble, especially in the U.S. and in Canada. It's outrageous at this point. And once that starts to slow down, it has a trickle effect overall in the economy. Um, that's on one side. On the other side, people aren't too happy when rates are raised, not because people care about CPI numbers, or they care about inflation, or rate hikes. Most people just want to know if they can pay their mortgage. That's just what it narrows down to. And if their mortgage is suddenly 5% more expensive because of these rates, because banks have to make money, then I think that's where you start getting a lot of discomfort, and you get these semi-recessions. That said, the Fed is against the wall at the moment because the US has big elections coming up at the end of the year, and they can't go into those elections having to have caused a recession. Um, so I think we're going to have this kind of tiptoe effect over the summer where they're going to be a lot more lenient and letting the markets run. We've already seen they've been passing these very aggressive spending packages of 1.5 trillion already. Um, and when you see that kind of spending, it usually shows they don't care for inflation. It's just huge amounts of money that they could be funneling towards very specific help, and you actually see, I think it was 800 million going, 800 billion going towards defense, which defense is such a vague term because when you actually look into the papers on how they spend that, they're paying $20,000 for cup of ramen noodles, or these really ridiculous spendings on defense spending. But it's really just, uh, to me, it's just money laundering at that point. It's government money laundering. And Europe is in a very similar situation. I'd say they're almost worse off at the moment. So it's going to be this game of Europe and the US trying to limit a recession, while Russia, on the other hand, in my opinion, currently has the upper hand because Europe does depend on oil and gas. And over the summer, Europe can be very cocky in a sense of, oh, we don't need Russia. But as soon as winter comes, that's a different story. And that's just accounting for population specifically. I think it was 50% of Germany's factories depend on Russian gas and oil. So that means, the biggest producers in Europe are not going to be producing if they don't have access to that. So there's this fight at the moment between a recession, controlling inflation, and how governments are reacting. And in my opinion, this is where crypto comes in terms of that decorrelation that we've had for the past couple months. Bitcoin has been
Decorrelation? Sorry to step in. What do you mean about by the decorrelation?
right. So for the past couple months, Bitcoin has been following tech extremely closely. If you look at something like the S&P and the Bitcoin chart, it's a very similar chart. And at the moment, the market is pricing crypto as if it were just tech. But this isn't accounting. Crypto was created specifically because of these poor monetary policies. It was created because, like, the financial crisis in 2008, it was created because government overreach, and inflation. And if you actually step back and look at where's crypto being adopted and used the most, that's where you start to see this correlation doesn't make sense. If you look at places like Argentina that has had inflation for years now, and how they've actually been transitioning towards crypto adoption pretty aggressively. Even more recent, Turkey with their when the lira crashed, I think it was last year. If you looked at the lira versus Bitcoin chart, Bitcoin was just going parabolic because the lira was
Mm,
just crashing. And people know that crypto is a safe haven. However, you often see people in the first world not treating crypto as a safe haven, treating crypto as tech. And I think that that's been part of the problem with a lot of big money entering the space. I think it's Kevin O'Leary he keeps insisting, oh, just look at crypto as if it's just software. But that's very wrong, and I think he just does that because he doesn't understand a lot of what's behind it. So in order for a lot of this big money to justify these investments, they have to act like they understand what they're buying when really you kind of prod them a little bit. And even I think it was Mark Cuban, he was just doing really ridiculous things in crypto that any crypto native would have been laughing at. So
okay.
I think these correlations are because there's a lot of new money that has been moving in, but they don't understand the difference between tech
Hmm.
and crypto.
Gotcha. Yeah, I mean, this sort of like aligns with my viewpoint here. Perhaps it's just some sort of like a confirmation bias, but in overall, the way I look at it, it's just well, Bitcoin. Um, well, I think it's the most fundamental thing to understand that everything moves in cycles, right? So you have the cycles in the markets, you also have the cycles in the correlation, apparently, right? There is the chart that I often share. Perhaps I'm not going to pull it up here yet, but there's the chart of the 7-week correlation, 50 20-week correlation of Bitcoin against S&P 500, right? So the large caps, and it's been very strong, and it's been very strong, like very strongly positively correlated. Right now, the correlation coefficient is exactly, to be specific, 0.89 on a 7-week
Wow.
basis. So it's trading basically flat. I think ever. Well, the correlation has, of course, just intensified and got stronger ever since 2022 started. So you started getting these
Yeah.
narratives of war, fighting inflation, rate hikes, and so on. And to the best of my knowledge, that usually when there is a threat of you know tightening monetary, kind of like tightening the rate hikes, the wars, some correlations tend to kind of like flip, and even the markets that are not necessarily correlated, they start being correlated for some reason, right?
Yeah.
So COVID 2020, for instance, like everything just dropped, right? There was equities dropping, there was crypto dropping, there was gold dropping, right? So,
Yeah.
so it doesn't make sense at all. And all of a sudden, when it doesn't make sense too much, these correlations kind of like start flipping. I only hope for Bitcoin to kind of like start entering this other side of a cycle of the correlation changes, that it starts getting decorrelated, just like you said, or not even the decorrelated, but inverting the correlation, right, to, to,
Yeah.
to, to make it negative. But so far, that just doesn't want to go off, just
Yeah.
doesn't want to come off. It's just
Yep.
staying flat, very high. So it doesn't definitely speak in terms of in favors of Bitcoin prices against S&P 500, against equities whenever they tank, Bitcoin tanks. I don't see much sense in it either. So I'm glad we agree in that at least.
Yeah. No, I think with that correlation, there's a lot of criticism of retail traders, even just small family firms or whatever. But I think that they're not stupid, and people are a lot smarter than big hedge funds give them credit for. And if you look at some of the biggest companies right now, that were supposed to be safe investments, according to the SEC, you got Netflix down like 80% from the highs. You got Shopify down like 60% from the highs. And since the beginning of the year, that's kind of been the trend. Just S&P crashing specifically on companies when Bitcoin is only down 10% from the yearly open, I think. Um, and as soon as people start catching on, not only is Bitcoin keeping up, but my
Mm,
dollar is actually down 10%.
mm, mm.
Um, People start to realize that it's actually better to just hold crypto, and specifically something like Bitcoin, or even you got outperformers. Ethereum has been doing pretty well. Like some of the bigger top 10 cryptos have been doing better, and people start to realize, like, why would I hold my dollars in a bank account that, or even euros? Like if you're in Europe, you got negative interest rates. Like they're taking my money. Why would I do this
I
where
know.
I can go into crypto and earn, if you're just very conservative, you can have a 5% APR on DeFi,
Mm.
um, where at least you're somewhat keeping up with inflation.
It's
Um,
insane. It's insane. It's insane. You know, myself coming from Europe, from Poland, is all. I can just see it in my own eyes, with my own eyes, and I can only confirm it, which hurts even more. And well, we've briefly touched, you know, already upon, well, Bitcoin, of course, Ethereum. So I know you have some charts ready to display. So why don't we just talk through the charts, and you see, and you reveal what the charts tell you, be it Bitcoin active addresses, EMA7. Talk to us about that.
yeah, so here's the Bitcoin active addresses. I like this chart because it's a very clear kind of indication of how much people are, one, interested in Bitcoin and how much activity there is overall. And we can actually pretty clearly see the highs here. Over here we have the 2017, 2018 top, and we can see there's a lot of attention in Bitcoin. And then we have the kind of the local tops. 2019 was the local top. May was the real bull market top. I know a lot of people like saying, "Oh, we made a new high in November." Yeah, but the high in November was without retail. It was a lot more of leverage high. It was spot. It wasn't spot driven like this high in May, February. Like this was the real cycle high. Whereas now it's been more of a relief run. Even if we made new highs in price action, the attention just wasn't there. That said, we are making higher lows in terms of attention, which means that even after the highs in 2017, where we had this huge low in just people truly capitulating, just forgetting about Bitcoin to a certain extent. We can see that we had that low in the summer, but since then it's been making slightly higher lows. People are sticking around a lot more. So I really like tracking active addresses because it tells you an idea of adoption and whether or not people are just forgetting about crypto altogether. So I really like tracking this specifically, to get a good sense of, one, are we on a decent uptrend or are we just kind of fading out slowly? So as long as we continue to make relative higher lows in terms of active addresses, um, I agree with what you've actually been sharing a lot with price action, that we're really just moving sideways, in that, in the price action, and it's just like a big consolidation overall. And then I'm gonna hop over to Glassnode because they have this
Hmm.
hodl waves. And hodl waves show how long people hold their coins before either selling or moving. But it's showing the waves of uh, the age bands to a certain extent of the coins that are moved to a wallet or just held and not sold hereafter. And we can actually also see cycle tops here. So the bottom colors are younger coins, coins that are moved between 24 hours, 1 month, 1 week. Then as we go higher to these cooler colors, it's coins that haven't moved for a long time. So the very top can be like the Satoshi coins that haven't moved for 10 years. And then we go down like the very early miners, they haven't moved coins, and so on. And we can see how they usually, what happens is near tops, we have a lot of the new coins being moved. So it's new people entering the market. And the old coins are shrinking because they're selling into the tops. And it happened again in 2017 over here. We had this spike of new coins. I'll also zoom in actually with the spike of new coins and the old coins taking that profit. And we saw that again in May, the new coins coming in and the old coins selling into profit. However, what we've seen actually is a lot of people that bought this recent top have continued to hold, and we've seen this age band really grow. It means a lot of the coins that have been held for at least a year, they haven't moved, and it shows a lot of maturity, but it also shows that if people didn't sell through all this chop in 2021, they're much less likely to sell in the next couple months because they understand volatility. Maybe it's people that bought a little back in 2017 at the top and then sold the bottom, and now they come back with the new mentality of if I had just waited 3 years, I would have been better off. So you see a lot of this happening where it looks like the market is maturing a lot more in the sense of people are holding their coins for longer and they're less willing to sell regardless of market volatility. So I really like looking at on-chain because it gives you an idea of how users and people are operating overall. Um,
Okay.
yeah.
Just to step in real quick, I love what I'm seeing here. Like some people, of course, call me permable. I'm definitely not a permable. I'm not a bear either. Is just so painful to watch. I think for so many people, the sentiment has been going down, like down the toilet, literally for the past 4 or 5 months, and this is just going and continuing like that, and the market just doesn't want to pop, right? Just continues sideways. Every single breakout you see, based on a price action, kind of like just comes down back where it came from, and the other way around, or the southern direction. But it's still kind of like, it is interesting to me because knowing that, from my feeling, at least from my observations, that the retail, because of the sentiment as well, typically kind of like, just runs away. There is this revulsion state in the market. They don't want to hear about them, about anything crypto related. But there is still this this tendency to hold, right, rather than to hold onto their positions rather than sell off. So doesn't it kind of like imply a little bit that there is some big more maturity in terms of the type of investors? That can it be institutions?
There's definitely a mix, because you do see a lot of these institutions that are coming in, buying and holding. But that's where we actually go. We can actually track the specific addresses. So if we look at addresses with zero point 0.1 Bitcoin, so most of the time this is going to be retail. We can see it's we can call these like the dollar cost average army or whatever you want to call them, but it's a very specific subgroup of just the dollar cost average into Bitcoin, and we can see these addresses have continuously been growing. So that's one side of the retail that is maturing a lot more in the dollar cost average with Bitcoin works. And you can definitely track it with these smaller addresses. And then when we go to the bigger addresses with 100 Bitcoin or more, that's usually where you start to see the institutional money. Back here in 2017, it was still early adopters, but now we see a lot more of the institutional money where they actually sold. They've been selling. We've been seeing a lot of whales kind of selling Bitcoin near 45, 47K. They think it's expensive there. But as soon as we go back over here to the 40K area, they buy again pretty aggressively, as we can see. So it's this kind of battle between newer institutions buying Bitcoin near 40K. They think that's a fair price, and some of the older whales selling near 47 because they feel like that's a little expensive. And actually, we can also see that with CryptoQuant, they have this great miner position index, which the recent sell-off was actually miners taking very specific profits. Um, and it's on chain. You start to see these certain trends of how institutions, but also bigger players start to behave. So we can actually see, if we zoom into the 2021, we had miners taking profits right before the bull run. And then they basically remained inactive throughout 2021 until recently when we touched 47K again. That last local top we had, they moved and took a lot good amount of profits. But if we actually move over to the reserve to track how much they took in profits, we can see they've realistically been in accumulation since the beginning of 2021. And even if they took some profits here, it was a very small amount of profits. It looks a lot more targeted. It looks a lot more like specific profit taking. Maybe they're expanding. Maybe they just need to cover costs. But overall, we can see this trend of minor reserve is in accumulation. They're looking to accumulate. They're not looking to take profits. Usually, when you see these bigger whales taking profits, it's when you're moving into a bigger cycle of an uptrend because the market can actually absorb those profits. So when we look at these bigger institutions recently, those are not taking profits. Most of them are accumulating. Actually, on Glassnode, we can actually track entities, and we can actually track for example, the Luna Foundation Guard that has been one of the big accumulators. We can see how they've just been accumulating Bitcoin pretty aggressively. We can track exchange balances that have been going down pretty aggressively as well. So it also shows people are accumulating. If we see, exchange balances have been going down pretty much since COVID was the last time there was a big influx on exchanges, which was April 2020, March. That was the last influx into exchanges, and it has been going down since then. So when I look at on-chain like this, there's supply and then there's demand. And when we saw already with the active addresses, demand has been very low, whereas supply has been continuously shrinking, and pretty much since March has been shrinking pretty aggressively. So it's not only Luna Foundation Guard that has been accumulating. There's other institutional buyers. There's other bigger participants that have also been accumulating pretty much since the beginning of March.
Gotcha.
So it's interesting to see, because where price action might tell us the likelihood of a movement, on-chain is only telling us supply and demand scenarios, and it doesn't tell us whether price is going to go up. I think that's the biggest mistake when a lot of you post this balance on exchanges chart on Twitter, and people are like, oh, it's supposed to go up because people are taking off exchanges, and that's actually not necessarily true. With 12% of Bitcoin on exchanges, it makes price a lot more volatile because there's less supply going around. So if a whale moves 1 million Bitcoin or $1 million of Bitcoin, the slippage is going to be a lot bigger, and the price is going to move a lot more because there's less in that pool. The pool is just shrinking, so every splash gets bigger.
The liquidity,
yeah. So when we see these supply shrinks, we really want to see when is the attention and the demand coming back. And that's when it starts to get interesting, when we start actually seeing demand coming back. So we jump back to active addresses, and we really want to see this start to climb again. So I like using the 7 EMA to kind of smooth it out a little bit, but really we want to see demand start to climb back as the supply continues to shrink, and then it's going to go the other way. Supply has to increase as demand comes, so that all these people that have been accumulating take profits into a movement that can absorb those profits without a problem.
Yeah, basically a trend, right? A trend, a firm trend that is just founded, as opposed to what we are seeing probably over the course of the past half a year and a half, and especially past couple of months. Xulian, I think we've already heard, myself and tons of people are going to appreciate your wealth of knowledge you're sharing. The fundamental. fundamental aspects as well as the on-chain side. We still have 1 or 2 points to actually discuss. Do we have any sort of like a quick altcoin chart on the on-chain side? Did you happen to have a look at it? That's some Ethereum, I guess, or I don't know. Litecoin is what triggers people so badly right now. Do you have any? Do you have any thoughts in terms of like altcoins to get this 1 or 2 altcoins very quickly just scanned? If you have something to comment over that.
Yeah, of course. I like looking at the hodl waves as we mentioned. So the hodl waves on Ethereum have been interesting because it's slightly different than Bitcoin. As we see, we don't have the old age bands because Ethereum just isn't that old. And it shows again that first initial top, and it shows again that accumulation. But I really like to see the balance on exchanges on Ethereum because it's been slightly more aggressive than the Bitcoin one. For a moment in January, I thought we were starting to curl up and people were getting scared and selling Ethereum and depositing. And it really looked like it was kind of forming this rounded bottom. But then, similar to Bitcoin in March, we've seen this aggressive accumulation. And we actually see that the supply in smart contracts in Ethereum has been continuously going up. So what does this mean? It's Ethereum that's getting locked up in smart contracts, usually in DeFi, and it's being used. And that's the biggest difference between the 2017 top or 2018 and the tops now. With DeFi, it really changes what is happening in terms of adoption and usage. And I really like using DeFi Llama, the total value locked, because it tells us a totally different story versus price action. We can see that total value locked in May peaked at around 156 billion. And right now we're pretty far above it, even with the recent setbacks, even with coins losing half of their value since the top. We can see in total value locked, we're actually much higher, which means people are sticking around because there's something to do in crypto. In 2017, there wasn't so much to do. Whereas now we can, look at all these layer ones, Ethereum, Terra, Binance, Avalanche, and there's so much to do. There's all these apps with $20 billion locked, and people are sticking around and using DeFi. So I don't want to focus specifically on charts so that people don't get idea of any preference with alts, even though I do have my favorites. But overall, looking at the value that is locked, and if we move over to chains, we can see kind of how much value is being locked in these chains. Even if Ethereum is being dominant here, we can actually see the growth of something like Solana or even Avalanche, where people are moving their money into these chains. On Terra, for example, if we use the market cap to TVL, it's the division of how much value is locked in that chain versus the total market cap of that specific token. Terra has a pretty healthy ratio. It's 1 to 1.2. So the TVL is pretty equal to the market cap. So it justifies the price of that coin a little bit more. Whereas something like Binance, you might say, is a lot more speculative because there's not as much locked in that token versus the price or the total market cap of that token.
Well, that is actually something very intriguing to me. I've never seen anybody just kind of like argue over a market cap to TVL ratio. I think is actually a very interesting combination here. So it tells you, of course, that the bigger the ratio, the more kind of like overvalued there is, like perhaps fundamental side of the things. The way I read it, Julian, I think there has been just so much discussed that I think our viewers and listeners are already probably going to consume all this knowledge with with all their powers all day long. So having already shared so much insights and so much amazing analysis inputs, I want to talk to you very briefly before we need to wrap the show about your new role in the Nest and your growth plans for 2022. And before I let you speak, I want to necessarily congratulate to you very strongly and very firmly on joining on the team. Last time I spoke to BC Richfield, basically, I also congratulated to him, and I'm here to tell to you and to all the viewers something that you probably already know, but it's not easy at all to get in the team. There is like hundreds and hundreds of people that really wanted Sobali to get in, and we only did manage to get or are approved finally three full-time people, right? So this is something that I'm very proud to have you on board, brother. And this goes all the way to not only to your beautiful personality, but to this amazing knowledge, wealth, and then pool of interest that you're sharing. But it also goes to this overall, I think, person you are, right? And this kindness that shines bright from your side, I think, is very much appreciated by everybody around, by myself and by the members. So congratulations, big congrats to you. Hats off, man. Well
Thanks so
done.
much.
Yeah, and tell me real quick about your growth plans. What do you focus on for the next months ahead?
Well, there's so much to focus on. I want to learn a lot more on specific tech in blockchain. I think it's going to make a difference as the space grows. Learning the technicals behind a lot of the projects. So I want to dive into that. I'd love to get more education on the TA side. So maybe do some of that education, the testing and that. And I also I really want to learn a lot more on analyzing addresses and a lot of the on-chain data, but for altcoins, which is really raw at the moment. That we don't have something as clean as Glassnode, so I really want to develop that side a lot more.
Gotcha. This sounds definitely very fair. And I think it's already accustomed to all the viewers and listeners, so that we end up our show, our podcast, initial podcast, with the final takeaway from our cast. So what would be this very short tip that you can leave all the listeners with?
Okay, I think the biggest tip right now is if you're in the market, you have to have either two views, either a long-term accumulation, you're the smart dollar cost average, or you're a very paranoid day trader that is just very paranoid because volatility is rampant. So I think that would be my biggest takeaway.
Choose wisely, everybody.
Yeah,
I think this speaks for itself there. Ladies and gentlemen, Julian, known on Twitter also at King Julian with J. I am King Julian. I am, and with the at the beginning. This is how you're going to find Julian on Twitter, and his bio really is very apparent. Crypto analyst, on-chain analysis, TA, and the fundamentals, and so much more. Ladies and gentlemen, Julian has been our guest for today's Nest Show podcast. Thank you so much for coming in. And well, I see you guys around on the Nest shows. Thanks, Julian.
thanks, guys.